Hi guys, it's Marissa. Hope you're well. Today I am going to talk to you about some information that I recently came across, which I found quite alarming, and talking about the number of Australians who have high home loan debt and mortgage debt in their retirement age or leading up to their retirement age. Some stats coming out of the ABS have shown that back in 1990, we had about 14% of Australians having mortgages during the time when they're aged between 55 to 64 years old. Now that number's more like 47%. So basically we're saying that almost half of Australians that are aged between 55 years and 64 years still have mortgage debt. And what we're also seeing is that 29% of Australians are relying on their superannuation to pay down their mortgage debt on their owner-occupied home. So I found this quite alarming and a little bit concerning, to be honest, because if people are relying on their superannuation to pay down their debt and they already don't have enough superannuation to fund their lifestyle in retirement that they're hoping for, then that's obviously going to put them in a very bad position later on in life and during those retirement years, and potentially mean that they're going to have to make lots of sacrifices to the lifestyle that they would have desired. There are other huge implications to this as well. There have been some international studies that have shown that being in debt at that age between 55 and 64 leads to psychological distress. It can have significant impacts on the well-being of people that are within that age bracket. And I think when you're between 55 and 64, you lack the ability to recover from financial shocks as well as you could have when you were younger. So those financial shocks could be shocks with your health or employment shocks if you get made redundant or things like that. So definitely, I guess what I'm trying to encourage is for some forward planning and making sure that you are putting yourself into a position where you have thought it through and you've planned how you're going to manage debt that you currently have on your plate, and also how you're going to manage new debt that you put on your plate. I guess you've got to treat debt differently, whether it's debt over your own occupied home that you're planning to live in once you retire, or whether it's debt over investment property. There's different strategies to tackle both, but it's important to be proactive and actually plan your management of that debt, not just to go with the flow and see what happens, because there are significant health and psychological implications on going into retirement without a significant plan as to how you're going to tackle the debt and how you're going to live a comfortable, financially secure future. So that's what I wanted to talk to you about. I hope that's been useful. If you want to have any more information about that, please reach out. Also, just an update on our fight against the South Australian government for the proposed land tax reforms. We are trying to encourage everyone to sign the petition and fill in a survey. So you'll probably see something on social media or in your inbox about that. Please get on board. Even if you're not one of the property investors whose land tax will increase, you will be impacted. All South Australians will be. So it's really important that everyone has their say and has their opportunity to voice their concerns in relation to this new aggregation model proposed by the SA government. Thanks for tuning in. We'll see you next time. Bye.